Welcome traders, hope you're having a fantastic time wherever you are. I'm back again with yet another amazing video. So it's been quite some time before I last uploaded my video. The last video I uploaded it like 2 weeks ago. So I've been kind of preoccupied by some other stuff, but luckily enough I'm back again. And this time I'm back again with another video that I am going to be teaching you guys how to manage your winning trades successfully. Okay, so make sure to stick till the end of this video in order to get the most value out of it. So we are going to be talking about how to manage your winning trades successfully. So as a trader, managing your trades is one of the most important aspects that you're going to need in order to succeed in this game. So you need to be able to manage your trade correctly so that when you're winning, you will at least come out with something rather than just coming out with nothing. Okay, so you need to know how to properly manage your trade successfully in order to be able to become profitable overall. Okay, so how to manage your winning trade successfully. So there are several ways of managing your trades. However, I'm just going to talk about the main two methods of managing your trade successfully. So the first method of managing your trade is using a trailing stop loss, and the second one is using fixed targets. So let us start with the first one, using a trailing stop loss. So when managing your trade by using a winning stop loss, what it means is that as when you find an entry and the market starts moving in your favor, you move your stop loss to profit as price continues moving in your favor. Okay, so what I mean by that is, let's say for example, let's say you're a breakout trader. It doesn't matter which strategy you are using. Okay, so I'm just gonna use this as an example. So let's say this is a resistance level and you wait for price to come and break it, and you're a breakout trader. So at this particular point, this is going to be your entry, right? This is your entry. So as price starts moving in your favor, as it moves in your favor, let's say you entered there and then you placed your stop loss just below the level. As price is moving in your favor, you move your stop loss in profit as it continues moving in your favor. So let's say you move it right here, then as it continues moving in your favor, you then raise it to that level, and then as it continues moving in your favor again, you raise it to that particular level. So this is what I mean by a trailing stop loss. It's just a way of managing your trades where you move your stop loss with price as it continues to move in your favor. Okay, so there are lots of methods through which you can use to trail your stop loss. So the main two methods through which you can use to trail your stop loss is by one, using a moving average, and two, price action itself to manage your trades. Okay, so let us start with the first one, using a moving average. So I'm going to be demonstrating this on the live chat. So here we have this example right here. So this is a zone right here. In case you don't know how to draw zones properly, I did a video on that, and I'll leave a link on the description to go and check it out. So let's say for example, and again, it doesn't have to be this strategy that I'm using. You can just use any particular strategy. Okay, it doesn't matter. So this is just an example for the purpose of showing you how to manage your trade. So let's say for example, you find an entry right here. You find an entry right here. So I'm going to be using the first method of trailing your stop loss, and that is by using a moving average. So let's say you find an entry right there, and let's say you place your stop loss just slightly, just around there, right? So what you're going to be doing is, let me just put the moving average. So this is the moving average. So how you use the moving average is, when price remains below the moving average, then you remain on the trade, and when price comes and crosses above the moving average, then at that particular point you exit your trade. So right here we have our stop loss right there, we have our entry right there, and in this example I'm using the 50 simple moving average. So you can use any other moving average depending on what type of trader you are. If you are an aggressive trader, you can use maybe the 20. If you are a conservative trader, then I would advise that you use the 50 period moving average. So all you do is just wait for price to close above the moving average, and when it closes above the moving average, then at that particular point you exit. So if you could have entered right there, you could have remained on the trade until at this particular point right here, at this particular point area right here. At this particular area, this is where price came and closed above the moving average. So you could have remained on the trade until this particular point when price crossed and closed above the moving average. So you could have ended up with a 1:1.61 risk reward ratio. So that is how you use the simple moving average to trail your stop loss. Okay, so this is just a sell, and for the buy, then you're going to have to wait for price to close below. So when you are on a sell, you're waiting for price to close above the moving average, and when you are on a buy, you wait for price to close below the moving average in order to exit your trade. So that is the first method, by using the simple moving average. The second method of trailing your stop loss is by using price action itself. So what do I mean by this? So I'm going to use the same trading example. This is the same trade example. So right here, by using price action, what you need to do is you wait for, when you enter your trade, you wait for price to form support and resistance levels, so that as it continues moving in your favor, you place your stop loss according to those levels that it makes as it goes in your favor. So for example, in this sell right here, as price is going down, it's making some zones as it goes down. So as you can see right here, we have this area that acted as a resistance zone. Price came and then came back to this zone, and price rejected that area. So this is a resistance zone, and at the same time, as it's going down, you can definitely see that it made this other zone right here. Again, it also made this other zone right here. Okay, and it also made this other zone right here. So as price, so this is a way of trailing your stop loss by using just price action itself. So let's say you have entered right there, and then price came and formed this area right here. Then when it broke again and went and continued moving to your favor, you could have placed your stop loss right above it. Okay, then when it makes another zone and continues going lower, you can go ahead and trail your stop loss and just place it above the zone that it makes. Again when it came and created this zone right here and continued moving lower, you could have just placed the stop loss level just right above it. Okay, then it made this other zone right here where it bounced from and then broke. Then when it broke it, you can then go ahead and move your stop loss just above it. So that is how you trail your stop loss using price action itself. And in this example, if you are trading this, if you are trailing your stop loss using this method, then you could have exited the trade at the same point where you could have exited by using the 50 period moving average, and that is at this particular point just above this zone, and you could have ended up with a trade with a risk reward ratio of 1:1.63. So that is how you trail your stop loss using price action itself. Okay, now you know how to trail your stop loss using the 50 using the moving average and also using price action itself. So we are going to go ahead and look at the second method of trailing your stop loss by using fixed targets. So let me just remove all these zones. Okay, so we are still going to be using this same example right here. So when managing your trade using fixed targets, what you do is you find an entry, place your stop loss and place your target. Let's say you find your entry right there, place your stop loss, and then place your target, let's say somewhere lower right here. Yeah, this is a good area. So you find your entry, place your stop loss and find your target, and after you enter, you wait for price to either come and stop you out at your stop loss level, or you wait for it to just come and hit your take profit level. So in this method, you don't care what price is going to do once you enter. You only wait for it to stop you out, or wait for it to go and hit your take profit level. So even if price shows signs of reversing and hitting your stop loss, you just remain on the trade and wait for it to either hit your stop loss or go to your take profit level. So you find your entry, place your stop loss, place your target, and then forget about the trade and come back later to see whether it has hit your stop loss or your take profit level. So this method has its disadvantages, and the main disadvantage about this method of managing your trade is that, let's say for example, price comes all the way down and it comes close to your take profit level. At this particular point, price may decide to reverse. It may decide to reverse and come back all the way to your stop loss. So when this happens, you're going to end up with a loss, despite the fact that price gave you so much profit and you ended up leaving so much money on the table. So that is the main disadvantage of this method of trailing your stop, of managing your trade. Price may move into your favor really far, and then all that profit may end up going under the table and you may end up with a loss. So that is the main disadvantage of using this particular method. So in order to avoid such scenarios where price gives you profit but you end up taking nothing, personally what I would advise most traders to do is by using a combination of both trailing stop loss and a fixed target. So what do I mean by this? So let's say you have your entry. I'm still using this same example right here. You have this entry right here. So you're going to combine the two methods, that is trailing stop loss and a fixed target. So for a fixed target, you're going to just enter there, place your stop loss right there, and place your take profit just below there. And then at the same time, you're also going to be trailing. Okay, so you place your target right there, entry right there, stop loss right there, and at the same time you're also trailing your trade. So when you do this, let's say when price moves in your favor, let's say you're using the moving average as a method of trailing your stop loss, when price shows signs of reversal, let's say right here, where it came and broke above the moving average, at least you're going to come out with something rather than nothing when price goes all the way back to your stop loss level. So I would advise to combine both methods of managing your trade in order to ensure that when price moves in your favor, at least you're going to come out with something rather than nothing. Okay, so just combine the two. Use a fixed target. When you also use a fixed target, let's say let's say you find your entry right there. You see, and price goes all the way to your take profit level, at least you're going to come out with the full profit rather than, let's say for example, let's say for example you are just trailing a stop loss and not using a fixed target. Then that means that you're going to come across some situations where, let's say you are not using a fixed target, you're going to come across some situation where price goes into profit, and let's say this is the moving average right here, and then at the same time price then decide to come all the way and come and stop you out right there when it breaks above the moving average. So when this happens, you are going to have left all this money on the table, this money right here. So you're going to have left this money on the table, which is why I again suggest that you use a combination of the two, so that when you find your entry, and place your, let's say your fixed target right there, you're going to come out with something rather than leaving this money on the table, this money that I'm talking about right here, this one right here, sorry, rather than going through such situations. Okay, so I would advise to combine the two methods, that is using a trailing stop loss and a fixed target, in order to manage your trade successfully, and also to ensure that you at least come out with something out of a trade. So that brings me to a close of this video. Go through this video over and over again until you have mastered whatever I have talked about, and then also go and backtest it on your demo, and also on your backtest it until you can feel, until you see the kind of results that I'm talking about. Okay, so if you haven't understood anything, don't hesitate to ask in the comment section. I'll be more than happy to reply and answer back. So that brings me to a close of this video. So see you in the next video. Have a good time, have a good life. Peace.